everybody, this is Brian from Realty World in Radcliff, and today my guest is Selena Hudson, coming all the way from Omaha Mutual, to talk to us about VA loans. So, Selena, how are you doing today?
I'm doing well. Thanks for having me, Brian. I'm happy to be here.
I'm glad that you're here so we can learn about the VA loan and understand and what it is and how it differs from the conventional mortgages. And there's some misconceptions about it that people have. That just yesterday I was talking to somebody who said the loan is free. I don't have to pay anything for it. So I want to clear the air of these misconceptions and educate some people about this loan. So first off, what is a VA loan and how is that different than the conventional mortgage?
Well, I'm glad you asked. A VA loan is a loan that is secured by the Veterans Administration. And it's different than the conventional loan because the conventional loan is either backed by Fannie Mae or Freddie Mac, but the VA loan is secured by the Veterans Administration, and you have to have served in the military, or there are certain exceptions for people that have not served that might be eligible for the VA loan. But that's where the main difference coming in. With a VA loan, there is no down payment required on most VA loans, so that is a difference between VA and conventional as well. Okay,
so you mentioned that it's for people that have served or are serving. Mm-hmm. What are some other requirements to qualify for the VA loan?
Well, and it's different with every lender. So I'm going to give you the VA guidelines, because if you have a bank or a mortgage company, I work for Mutual of Omaha Mortgage. I've been a loan officer for 20 years, and I've worked at a couple of different banks. So everyone's guidelines are different. They call those overlays. Okay. VA does not have a minimum credit score to get a VA loan. There's no minimum credit score. But banks add overlays to protect themselves, and our minimum credit score is 580 for a VA.
Okay.
Hopefully that makes sense.
Yeah. So what you're talking about is just because someone served in the military, it means they qualify to obtain or apply for the VA loan, but they still have to qualify at the bank to get the VA loan through their credit history. Yes. So if they have bad credit or they have maxed out credit cards or poor credit scores, that could stop them from getting the VA loan even though they've served honorably.
Yes, it could. And we don't like to use the word bad credit. We always say if life has happened, because life happens, And so you have these extenuating circumstances and your credit score may be lower. Maybe you had a late payment on a bill or something like that. But VA is probably the most lenient or forgiving of all of the loan types out there.
Okay. And then the debt to income ratio is also different with the VA loan in relationship to the conventional mortgage. Is that correct?
That's correct. VA does not have any debt to income ratio guidelines. VA qualifies you based on, they call it, how did I draw a blank on that? Residual income.
Okay.
So it means after you pay all of your bills and your house payment, how much money do you have left to live on? They even include daycare. One of the few loan programs that includes daycare in their calculation of your debt to income ratio. Lenders like to add a debt to income ratio overlay to the VA loan just to give them a guideline of whether you qualify or if you're going to have trouble later paying this loan back. And we kind of like to see your debt to income ratio somewhere between 41% and a 55% back end. But like I said, because VA, we sell directly to VA and VA does not have a debt to income ratio guideline, I've been able to get people approved up to a 63% debt ratio. I've seen that where they got an automatic approval because they had additional income, maybe a spouse that was working, or money in the bank. Okay. Having a lot of assets really does change that.
Okay, and what would be the traditional conventional mortgages debt to income ratio?
29 on the front end and 41 to 45 on the back end. Conventional is a little bit more strict about their debt to income ratios.
And by front end, we're talking about the mortgage itself, and back end, you're talking about all
Everything.
debt.
Yes, all of that. I'm sorry, I used the mortgage term. And you can get approved for a conventional loan up to a 50% debt to income ratio, but you're probably not going past 50 on a conventional loan.
So it is up to the lender what these debt to income ratios are, but in regards to comparing the conventional to the VA, you're allowed a higher debt to income ratio with the VA loan.
Yes, and that is correct.
Okay.
And you know, I like to see, for my clients, I really like to see their back end ratio somewhere between 41 and 45. To me, you have an ability to repay that loan greater than when it's higher. The interest rate is higher when your debt to income ratio is higher, because the risk is greater of you defaulting on the loan. So to get the best interest rate, you really want your debt to income ratio to be below 45%.
Okay. And now, on a VA loan, like an FHA loan, the borrower is expected to live in the home. Is that correct?
That is correct. A VA loan, you are required to live in the home, to move it, to occupy the house within 60 days of closing, unless, let's just say, you're active duty and your spouse, you're somewhere else and your spouse can occupy the house within 60 days. That is also acceptable to VA.
Okay. Now, is there like a minimum time period that the borrower is expected to live in the home, or?
Well, at closing, you are signing saying that you're going to live there for a year.
Okay.
But as we all know with military, you have no control over when you get orders to change your duty station. So if you get orders, then you have to go, and you still are required to pay that house payment. I've had people ask me that question. They say, well, we PCS, so we didn't think we were obligated to pay that mortgage anymore. Yes, you are. You're still obligated to pay the house payment.
So a misconception of the VA loan.
Yes.
If the government tells you to move, you still pay your bills.
Yes, and you sign that at closing as well. That's one of the pages.
So going back to what you were talking about there, you said that at closing, you signed some paperwork saying you intend to live there for a year.
Yes.
But if the government gives the permanent change of station orders to a service member, telling them to move from Fort Knox, let's say, to Fort Hood, Texas, 3 months later, it's of no fault of the borrower that they're moving. So is there a penalty or anything? So
no, there's no penalty. You can sell the home at that point, or you can rent it out. It's totally understandable that you would have to move.
So there's no risk of getting the VA loan and then finding out that you got to move just because it's the government telling you to move, not you moving on your own.
That's correct. And it happens all of the time. I've had people use their VA loan to buy a house, and then they find out that their spouse is pregnant. And maybe they bought a 2-bedroom condo or a townhome, and so now they need a single-family home because they have another addition. And I mean, how can you predict that? And so then they need to move.
I got you.
Yeah.
So assumptions of loans with the VA. Throwing you a wild card here. Can you assume a VA loan? Well, first off, what is assuming a mortgage, and can you do that with the VA? Yes,
VA allows assumptions, and it actually works quite well, especially in these types of markets, because there are people out there with a 2% interest rate on their mortgage. Their house is more attractive to someone in this market where rates are 7%. You may assume their mortgage with their interest rate that's attached to their VA certificate of eligibility. Now, if you're a veteran, you can put your certificate on the house, and that helps the veteran homeowner to get their certificate free off the home.
So under the assumption, can anybody assume the VA loan, or does it have to be another service member to be able to assume a VA loan?
Anyone can assume a VA loan.
Okay.
And the criteria for qualifying for an assumption is not the same as qualifying to purchase.
Right.
Because credit is not, so it's not a big deal when you're assuming the loan. There are other factors that they look at when you're assuming someone else's loan.
Okay.
So,
And like you said, right now, last year at least, interest rates were 2-3%, and it's what, November 3rd,
yes.
and just this week, interest rates went up 75 basis points, and it seems like every couple months this year, the Federal Reserve's been raising interest rates. So right now, if they were to get a mortgage, we're talking could be 8% now.
It could very well be, yeah,
because
potentially.
of the raise that happened this week.
Yes.
So assuming, like you said, a 2% mortgage or 2.5% mortgage, as opposed to getting your own,
might be the way to go.
That's a huge savings on a monthly paycheck. So
absolutely.
So that's a lot of power on the VA loan.
Exactly. And if they've been paying on that loan for 10 years, you start right where they are. So if they have 20 years left on their mortgage, then that means you have 20 years left on a 30-year mortgage because they've already paid in 10 years.
Okay. So if they, let's say the mortgage has $200,000 and we're selling for $300,000, how would they get that other $100,000 to make the purchase? Would they get a second mortgage or bring cash?
That's a good question. Well, I have not had the experience of someone assuming a loan that from a veteran homeowner, that assuming it and paying more.
Okay.
But they would definitely have to bring their own cash. A bank is not going to loan you more money than what you're paying for the home. If you're assuming their loan, you're assuming the $200,000 that they owe on the house. So if part of the deal is you give them another $100,000, that would have to come directly from you.
Okay. So let's if somebody wants to get a VA loan, how would they start that process? So do they go to the realtor and say, I want to buy a home, do I get a VA loan, or is there a special government entity that they need to go to do they go to the Veterans Administration to start the process to get a VA loan, or how does a service member or retiree start the process to get a VA loan?
There are many different ways that you can go about starting the process to purchase a home, but the best way is to call a qualified mortgage lender or bank and apply for the loan, get pre-approved by the bank, know your buying power, know how much you can buy, and then contact your real estate agent. But as we all know, that sometimes with the world of the internet, you're online, you might apply for a loan online. You might reach out to a real estate agent, and then the real estate agent refer you to a qualified mortgage lender. There are many different ways, and you can contact the VA directly. I've had borrowers to do that as well. They get their own certificate of eligibility. When they come through the door, they already have it. They've obtained all the necessary information to purchase the home.
Basically, there is no government entity they need to go to. The Veterans Administration backs the loan.
Yes.
They can go to any lender.
Yes.
So their local bank that they already use, or anybody else who is a mortgage broker that's licensed,
right,
that can help you. So
that's correct. And not all banks do VA loans.
Okay.
There are some banks that will not do a VA loan.
So another misconception is, you mentioned earlier that the VA loan has 0% down because the VA is backing it and that's providing insurance to the bank. So people think that the loan is free. So is this loan free?
No, the loan is not free. You will have a mortgage, whether you get a 15-year mortgage, 20 or 30-year. You can even do an adjustable rate mortgage, but you are going to have a mortgage note attached to that house, and it's not free.
So in addition to the actual mortgage, so like we were talking about a house that's $300,000. If I come to you and say I want a VA loan for $300,000,
right,
and you say I want zero down, am I going to show up at closing and it's going to say $300,000, or is it going to say something else because there's a fee associated to the VA loan?
Yes. Well, it depends. because there is a funding fee that the VA charges. There is no monthly mortgage insurance on a VA loan, but in order for them to be able to do that, they charge a funding fee. And depending on how many times you use your VA loan will depend on your funding fee, depending on whether you were active duty or reserves. If you put money down, the funding fee is less. Or you can pay your funding fee in cash at closing, or have the seller to pay it. Ask the seller to pay the funding fee. If you are a disabled veteran, you are exempt from the funding fee. So that may be where the misconception comes in, that the loan is free because my buddy didn't have to pay the funding fee because they were a disabled veteran of any percentage rating.
I think another part of the misconception is you can roll the funding fee into the mortgage.
Yes.
So you're still showing up to closing with nothing.
Right.
But it might say your mortgage is $310,000. Say, just throwing a number out, that might not be the true, fee amount, but they stack that fee on top of the mortgage.
Yes.
So
it's financed into the loan. Yeah. You can pay cash. You either pay all of it or it's all financed. You can't pay half the funding fee and finance half. It's either all or nothing. So, yeah.
Okay. Now, can you reduce the amount of the funding fee? Because you mentioned if you're a disabled veteran, it's free.
Yes.
If you're not a disabled veteran, can you reduce the funding fee?
Yes, by putting a down payment down.
Okay.
By putting 5 or 10% down, it will reduce the cost of the funding fee.
Okay. And then, let's see here. So another misconception that I even fell victim to this in the beginning.
Okay. What was that, Brian?
People always talk about you can only have one VA loan at a time.
And that is not true. That is a misconception. You can have multiple VA loans at the same time. And
after I learned that one, I had multiple VA loans, so I'm living proof that you can have multiple VA loans.
Yes.
So what is the limit of the VA loans that you can have then, since you can have more than one?
Okay. So VA eliminated the maximum loan limit on their loans. You can get a VA loan for $9,000 or $9 million. I mean, there's no loan limit on VA. However, if you already have a VA loan attached to your certificate, that's when the county loan limit, the county that you're purchasing in, that's when that county loan limit kicks in. For your second tier of VA loans, for you to be able to purchase a home and you already have a home on your VA, on your certificate, your new home has to cost $144,100 in order to be able to use your VA while you already have a home on that loan. Then what kicks in is called second tier, and you have the ability to purchase another home.
Okay.
Up to the county loan limit. But you can still purchase more than the county loan limit. You would just bring the difference in cash.
Okay, so if the county loan limit was $300, you want to buy something that's $350.
Yes.
You can get the loan up to $300, then you got to figure out that other $50.
Yes.
Okay. Do you, off the top of your head, know what the county limit is for Hardin?
It's changed a couple of times this year.
It's a wild market in the real estate.
Yes, I would have to look that up, but it's up there pretty good.
Yeah. It's incredible how fast the prices are changing. So it makes sense that it's changing not on January, but throughout the year. They've
had to increase it because, like you said, the values of the properties have increased so much. So, which is great. It's a great problem to have.
So that's all the questions I had.
Okay.
Is there anything that you would like to add?
I would just like to thank all of the veterans for their service. And this is National Veteran-Owned Business Week, and we're honoring veterans because it's Veterans Day is coming up, and it's a great time to celebrate our heroes and all of our service members, men and women that serve and we just want to remember them and make sure that we honor them and salute them. So
right.
I just wanted to thank them.
Well, thank you for coming in today.
Thank you for your service, Brian.
Well, thank you. And thank you for sharing all this valuable information so we can, educate some people and get rid of some misconceptions and make sure everybody's, got some on the right page.
All right. Thank you for having me.
And we can edit that out.
Right. Do we need coffee mugs? Yeah.
There you go.
It just always, for some reason, every time I see somebody talking, they're holding a coffee mug. I don't even drink coffee.